Hey everyone, it's Evan here from the Trade Risk on Wednesday, November 1st, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. We're going to jump right into the charts here with the S&P 500 SPY ETF. And you can see today we finished slightly higher on the day, up 36 cents here, 14 basis points in the SPY ETF. And we came into the day here with this scenario of back-to-back inside days. So if we look here, this is a daily chart of the SPY. Last Friday was this candle right here. We did our last video update on this session here. We talked about the breakout to new highs. We started the week, however, coming back, retracing a bit with this inside session, inside bar here, down $1 on Monday, and then ranges actually even compressed a bit on Tuesday. So yesterday things got even tighter and we came in today with this kind of nice coiled pattern, and what we saw was a gap higher today, so a resolve to the upside, two new all-time highs here in the SPY. But you can see even after trying to push up just a little bit off of that open, we did ultimately fail and kind of lose intraday ground on the day. We still finished up 36 cents here in the SPY ETF, but you can see didn't quite hold those levels or tack on extra gains after the gap higher this morning. So be interesting to see if how we end the week, basically, to say, can the bulls continue to kind of move us sideways and grind this higher, or is this some type of short-term exhaustion signal here, the fact that we gapped up? Again, we did close positive, and this is really sort of micro short-term levels here. If we zoom out, of course, the trend extraordinarily strong. If we go to the weekly chart, you can see we did have that wide range week last week here where we traded all the way back down to the prior week's lows, but we ultimately closed at the highs. And then today, or this candle this week here, you can see we popped up. That was today's action. Then we kind of pulled off of it a bit. So we're down just slightly on the week, but very much at all-time highs, basically at all-time highs, extended away or above, trading above the 8 and 20 period moving average on the weekly chart. So long-term, the trend still looks good. Even the daily chart, short to mid-term trend is very much intact. But let's pay attention for you active traders that are looking for some type of movement or some type of two-way trading, or at least some type of pullback. Pay attention to the short-term very kind of failure here and see if we get any ground off of it. Don't hold your breath. It hasn't been that type of market, but eventually a pullback will start at some level. Maybe this is it. Maybe it's next week, next month, next year. So that's the S&P 500. I think basically we're at the same exact level as we talked about in our last update on Friday, so not much has changed structurally. Basically, everything is pretty much intact. We did have the FOMC minutes today. We got through that. No real catalyst there for the market to latch onto. So again, you can see fairly muted reaction. And we do have earnings, and we have plenty of earnings coming out even as I'm recording this right now. I know, I believe Apple, Facebook, Tesla. I think there's some big ones. Or is it Apple today? I'm not sure, but there are clearly some influential earnings coming out. So we'll have to pay attention to that and pay attention to the reaction there into tomorrow. If we go to the small caps, I think this was sort of an interesting trade today, or an interesting move today. Again, we saw the gap higher here in the small caps in the Russell 2000 IWM ETF, but you can see again, no progress was made. The open was the high print of the day, and we basically came back down and engulfed yesterday's session. So we're really sort of just ping-ponging back and forth here in the Russell 2000 in the IWM. It's now put in a reasonable amount of consolidation here. It's been about a month moving sideways to slightly lower here under 150. Nothing inherently bearish about this whatsoever. It is working off this strong run it had through September, but we're waiting to see now, can it actually leg higher? Clearly it tried to today, it failed. So in the short term, tells us it at least needs some more time in here moving sideways and just maybe chopping it out a little bit more. And for the downside, for that short-term level to pay attention to now, that 147.60, it's been basically demonstrated 3 times here, and we've gotten a bounce on it each time we've traded down to this 147.50 level. We don't probably want to keep testing that unless we are going to sort of move lower here. And again, if we do move a little bit lower, retesting this kind of acceleration, this breakout area above 145 in October or late September might not be the worst thing in the world here for for the small caps either. So basically still on watch. I came into this week thinking that the Russell 2000 might be ready to start to make that move. Clearly it tried again today. It failed. So still needs some more time. Let's pay attention to see how it closes out the week. But for now it's consolidating, and a little bit more of it is again not a bad thing. So if we go to the Nasdaq 100 last, you can see now very much here, same exact scenario, gap higher today, 2 new all-time highs. And at one point we were engulfing yesterday's session to the downside, but you can see we did get the bid off of yesterday's lows here, and we did finish up off of the lows, down just fractionally, basically flat on the day here. So not much has changed with respect to the Nasdaq 100. I think it's actually up leading the charge on the week so far. It's up over 0.5%, so tacking on some gains to last Friday's acceleration to the upside. So for for structural reason, structural perspective here, everything is basically in the same camp here. Trends are higher. Volume came in on Friday. We're extended away from the 8 period. Could it be, could it be due for some type of rest? Sure. It did just have, this 5 or 6 day pullback here, and then kind of catapulted off the heels of earnings last Friday. So it looks like it's fairly fresh squeeze. So, depending on maybe how Facebook, Apple, and some of these other events that have good weighting here in the Qs act tonight and throughout the end of this week, that could change things. But for now, bulls very much here in control in the Nasdaq 100. So that's the landscape overall for the major markets. I don't think I missed any points that I wanted to bring up. If we jump into some of the other major markets here, TLT, so the long bond, is doing well this week, up 1.23%. We're getting a reaction, getting a bid off of that 123 level that we talked about as basically being a long-term inflection point at this time. And you can see once again it acted as a bit of a magnet to retest, and then it acted as a nice spot to kind of step in for the buyers and bounce us off of that level. So we are now back up to 124.75, below the highs here from mid-October, and you can see above now the 20 period moving average. So the bulls still have their work cut out for them here. Plenty of overhead supply to try and cut through. It's a pretty messy area. Again, I'd just be paying attention to the highs here from October, which is about 126, and then the lows around 123. To me, it probably needs some more time just kind of chopping around and really causing headaches all around. So not interested in that really whatsoever. USO continues to grind higher. It was down a bit today, had the gap higher just like equities did, and kind of failed down and closed slightly in the red here. But if you look at it from a trend perspective, we are heading up and to the right. That's a bullish thing. That's a bullish development and formation. So the 8 and 20 period moving average is below price and supporting this trend higher. So bulls are in control until proven otherwise at this point. And natural gas is basically the exact opposite. As oil started to break out to the upside, we saw a break to new lows here in natural gas, and you can see it did have just the exact reverse action here too, with a gap down and a close near the highs of the day, but still in a very tough spot here. You can see the 8 and 20 period moving average are bearishly aligned above price, so that's something you want to be very cautious with. And you had this recent breakdown basically to new year-to-date lows below the 620 level. So I think sellers very much in control there for natural gas. If we go to metals next, metals had a bit of an interesting session today. I think silver more so, but gold was up here on the day. It looks like it's trying to hold in here right around this 120 level. So almost a double bottom, slightly above the highs here from early October. I think that is mildly constructive action. There's not a real dominant trend here in gold, so it makes it tough one way or the other. But we are seeing at least some stabilization here above October lows. Let's see if that can actually hold. It's still in kind of a tough spot, sandwiched underneath some of these fast moving averages. So we'll have to see if the gold bulls can pull this off. If we start to break down below 120, that's going to be in a tough spot. We drew this here as a potential sort of second leg measured move lower if we started to take out the 120 lows here. So far it's holding. If we start to break through there, then I'd look around 116 or so as sort of the next line in the sand again, to pay attention to. Now, silver, though, I think today really spoke up, and now it's starting to actually, outperform a little bit here, at least in the short term, put in a nice kind of higher low, or at least is in the process of trying to put in this higher low a little more definitively versus the early October lows. You can see up 2.5%, good volume today. The 8 and 20 period, it's now above those averages, but you can see not quite in straight alignment just yet. So it needs a little more time, but I think early situation here, bulls are trying to step in. I think this is an interesting development here if you're active trader. Again, if you zoom out, there's not a real dominant trend at hand here, so it's very messy, and that makes it difficult, but I think we'd want to pay attention to potentially this sort of day one move here in silver. Next up, I think covers all of the major averages, or all of the major markets. Let's go through some of the sectors here. We'll go to materials first, which are still holding up, one of best in class here. It's just in this kind of grind higher, this smooth uptrend above the 8 period. It's been like this since the beginning of September, and it basically continues to trade very, respecting this trend very much to the upside here. So I like materials. They still look good here. Kind of a, not the most promising candle on the day, but still outperforming on a relative basis, and still, again, holding above all those major averages. So for now, material stocks and sector continues to work. Semiconductors, nothing new here. This continues to work. Again, it had the slight sort of gap up and failure today. Good amount of volume coming in. So that is a little bit notable here that we are getting that uptick in volume on a sort of outside reversal day, if you want to call it that. But it needs some confirmation. The trend is strong. Again, trying to fight this is going to be really difficult. Pullbacks have to start somewhere. Maybe it's here. But again, keep in mind the sort of force and trend that you're fighting. Are we extended? Sure. Have we gone a long way before a pullback? Absolutely. So, there's all those factors that can kind of lean you into the trade, depending on how you want to look at it, how tactical you are, and what kind of other exposure you have. XLK, basically the same thing, closed flat here, slightly higher on the day, but basically the same thing. Looks very similar here to, say, the Nasdaq 100, hybrid between the Nasdaq 100 and the semiconductors. The way this trend and kind of price structure has developed here, had the big gap up from Friday, and we've sort of grinded ourselves higher here. Again, volume not so not so interesting today like semis were, but just very much kind of holding up. Maybe short term needs a little break. That's reasonable, but trend remains very strong. XLY, a little more of a sort of outside reversal today, a little more meaningful, and it's coming at an interesting spot here, at a spot where you might expect a reversal to come, or some resistance to kind of to come into the market here and flex itself. This XLY right around this 92.35, 92.50, you can see right in July, mid to late July, we saw that level get tagged and ended up causing the reversal, or ended up reversing at that spot, I should say. May was basically the same thing, and then again you can see today sort of influencing this level right here around 92.35. So again, bullish trend, bullish moving averages. So short term, maybe that's something to sort of latch on to if you're a real active trader, but longer term, we just want to see this more convincing sort of breakout try and establish itself. If we go to a weekly chart here, you can see this is what the landscape looks like. We've been basically consolidating in this upper level sort of basing pattern here since May of this year, and 92.25, 92.50 or so, that's going to be sort of the bogey to the upside to take out. Now on the downside, or not on the downside at all, on continued kind of upside consolidation, here's financials, which you can see continue to sort of just cool off a bit here at highs. Most of them have reported earnings at this point, and we've seen a nice move. We've come off of this base here. We're at year-to-date highs, and you can see just for the past week or so, we're consolidating. These fast-moving averages have caught up, and you can see closed up just slightly here on the day, but something to pay attention to. The trend continues to be strong here in XLF, so let's respect that. Let's pay attention to it, and if if you're looking to get involved or look for some fresh momentum, take a look at this 2680 level. This cluster of recent highs here I think is worth paying attention to. Next is IYT, which continues to sort of pull back a bit here and consolidate. Again, not giving much back on a percentage basis, but just kind of really slowing down and kind of just dripping lower here just a bit. 176 or so, that's where we've kind of tested for the past couple of days, couple of weeks really. And you can see again, 180, 181 were basically the highs. So we're not far off the highs, just consolidating. This could be an interesting spot for the IYT if you're looking to get some exposure to the transport. Some of these names that may have cooled off, pulled back, something to pay attention to. And last but not least, we're going to look at industrials, which have pulled back and continued to pull back a bit today. Not the best close here from back-to-back days, basically. Really this whole week, Monday closing at the lows, Tuesday on the lows, today on the lows. We're starting to break below the 7160 level. This was some minor support here from the beginning of the month or beginning of October. And you can see we're starting to lose ground there just a little bit. So it's pulled off, it's worked off some of those frothy conditions. Let's look for some type of reversal here. Right now the pullback is still underway, but if we saw some type of sharp reversal higher back above $72, that might get you interested into some of the industrials. Maybe some rotation comes back into here. So that's it. That's all I had on my list. So hopefully you had a good day trading. Thanks so much for watching. And if you're new here, do subscribe to our YouTube channel if you like these videos. Basically a couple of times a week, Wednesday for the midweek update, and on the weekends on Fridays for the weekend video, and sometimes a few more in between. So thanks again for watching. Good luck out there, and hope to talk to you again soon.